Welcome to TheoTRADE. This is Don Kaufman. It's February 7th, 2024. Just about 10 minutes to go to the cash close here on this Wednesday afternoon. SPOOs, once again, they're just ripping to the upside. And it's the exact same stocks running this marketplace, which we're going to get to here momentarily. Before I get there, look, got the S&Ps up again and up again big. What we're about to look at, though, and kind of a little bit by sector, even some stocks individually, kind of the same old situation. And I cannot help but think that markets are just turning a blind eye to some risk out there that is absolutely, again, it's prevalent in this marketplace. Let's actually break that down. First, I want to start with the SPX, what I call the mother of all products. So one thing that really kind of bothered me throughout the course of the beginning of the week is the expected move here. There's what I would say is, big boy risk this week. And I say big risk, but it's plus or minus about a $70 expected move. And I always like to do this kind of halfway through the week to, gauge where are we on the week. And the truth be told, you started the week pretty mellow. All of a sudden, pop, big move to the upside over here. We're about halfway home right now to the upper edge of the expected move. However, immediately want to reiterate, don't hang your hat in the fact that we're just necessarily headed to the upside. But one of the things, again, that you're supposed to take away from that is a $70 expected move doesn't, you don't have to think about implied volatility. You just look at the $70 expected move and basically say, look, risk is forthcoming, because in almost every single week, and you can only find handfuls of times it doesn't do this, but in almost every single week, we hit the upper and or lower edge of an expected move. What that basically implies is, look, I know that we're only halfway home right now, but I think you have to anticipate a hit to the upside or even a hit to the downside. And hit to the downside would imply a wild, 100-point move, if you will, to the downside. Because people, gather this. That's 48.90, which is, as I said, about a 100-handle move to the downside. Nevertheless, the upside of that expected move is 5,027. It's closer, but as I said, we're only about halfway home to it. Be mindful of that coming in to Thursday and Friday is, again, statistically speaking, do we have to hit the upper or lower edge of the expected move? And the answer is, well, of course not, okay? Nevertheless, from a probability point of view, okay, you have better than 9 out of 10 weeks. Over a 90% chance of hitting the upper or lower edge of an expected move in any given week. Meanwhile, I made what I think is a fairly bold statement early on that it just, again, I recognize and fully recognize the upside potential of this marketplace, okay? But it's the same situation that it was, okay, into late last year, and that is, what is driving us, okay, is tech. And, and then there were three. I mean, you have NVIDIA today to the upside. NVIDIA got all kinds of squirrely in yesterday's trade. And again, here's another instance where I want to bring up the expected move, make a quick point. On Monday, we just cracked right to the upper edge of the expected move. On Tuesday, we went right back to unchanged in the week, only to explode back up on this Wednesday. We are at highs as I am speaking here on NVIDIA. When I say, though, it got all kinds of squirrely, even early on in trade today, it was a dip, it was a rip to the upside. Nevertheless, yesterday, okay, it's not soon forgotten. It is very much like a fever pitch in there. And it's one of the risks that you have to think about in this marketplace is, what else is holding it together? Is it okay that it's all NVIDIA? Okay, a little bit of Meta in here. Speaking of Meta, let's actually look at its auto expected move. This will actually surprise you. Although Meta is bid up today, it is still down on the week, right? last but not least, you have Microsoft. And Microsoft is cresting. It's actually going to be closing basically to highs, right? Look at its auto expected moves. Again, ironically, it's just a hair above where it started the week. I cannot stress enough that 3 stocks, okay, does not make for a stable market. Now, that is not to imply that we're going to tank here, any minute. But as I said, if you're not seeing this, it's part of the problem. Look, if you're going to get bullish in markets right now, use spreads. I just cannot, look at this market and think that, again, I can think in a very bullish fashion, but if you're going to be bullish, risk reward isn't favorable. Therefore, use spreads. Okay. I don't care what you say about being bullish or bearish. That's not my intent by saying this. Okay. What I am saying though is if you're going to be bullish, understand, that those bullish trades, do you really want to go out on a limb and like buy a futures contract? Absolutely not. You want to go out there and buy, shares of the spiders? Of course not. Use upside spreads. Okay, if we continue to break to the upside, hey, wonderful. You've got some profitability in there, but go into this marketplace to find risk on those upside shots because this is where things can get crazy in a hurry. We're literally looking at 3 products that are unequivocally driving markets. Like you can't exactly point to Apple driving things today, although, if you look at Apple, from an auto expected move, it still is at the upper edge of an expected move this week. Nevertheless, it's actually down today. It's not helping at all. Okay. What else do you have? You want to talk a little bit about financials? Okay. Financials are, for the most part, yeah, they're higher today, but unchanged, relatively unchanged in the week. We could take a look at the energy sector, which is literally unchanged in the week. What other supporting bid is under this marketplace? Moreover, if the marketplace started to get really wild again in NVIDIA, what would be the sustaining bid? Meaning that, look, if NVIDIA, for instance, is not up 18, it's down 18. Of course, at this point and at this juncture, people are like, that can't possibly happen because you get into this almost Pavlovian response. Bell goes off, yeah, let's eat. And the market goes to the upside. The reality, though, an $18 down move, what's there to stabilize the marketplace? And the answer is nothing. You saw that yesterday. And the S&Ps were down almost 40 handles yesterday at one point in the trading session. Things get crazy. Things get crazy in a hurry, right? I mean, touching down it's fairly significant. Again, some significant sell side activity in the last 24 hours. There's two-sided trade. It's the interesting thing right now. When I say there's two-sided trade, yeah, the market is technically going up and down. It just keeps resolving itself a little bit higher. And, we've been in some crazy situations before. Unequivocally, this one, it's right up there, right? It is right up there. Markets, again, they just simply don't care right now, about some of those risks. And that's predominantly because trading firms, they're not assuming the risk, if you will, of the retail side. I mean, that's the biggest takeaway from this evening's video is, number one, look, orientation. We're only halfway home to the upper edge of the expected move. Things could get a lot crazier this week. Number two, is just simply try not to turn the blind eye to risk. It doesn't, again, not caring whether you're bullish, whether you're bearish, what your positioning happens to be. Be aware that you have 2, maybe 3 stocks that are literally driving the entire marketplace. And those 2 or 3 stocks are in that kind of fever pitch where, that people, NVIDIA is the marketplace. Thanks everybody for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.